Hello, this is a video for IME 315, Financial Decision Making for Engineers. My name is Liz Schlemer, and this video is on gain from sale of assets. So when we look at the 5 topics that are covered in this class, we're still in the concept of looking at investment analysis. So an overview is that we often want to know the cash flow diagram that's illustrated this way when we're making an investment, where we invest in some amount that needs to be depreciated over time, and then we actually calculate the net cash flow. We have other things associated with cash flow like working capital and assets, and then we have to figure out the after-tax salvage value. And this video is really looking at these issues of sale of assets, which is also the same thing as figuring out what the after-tax salvage value is. So we're going to look at this example, which we looked at before, but I've added to that. The asset is sold at the end of year 3. So instead of a 5-year project, we have a 3-year project. Depreciation is still continued on a 5-year. The assembly line will last for 5 years, but we're going to sell it in year 3 for $35,000. This is a salvage value at the end of the life of the project. So now the project looks like this. We have $50,000 investment, we have 3 years of cash flow, plus we have a salvage value at the end. So the data that I have right here is sales volume, sales price, cost of goods sold, operating expense, tax rate, interest rate, and the number of years now is 3 with a salvage value of $35,000. So we remember before we had this calculation of $22,960 when we did this calculation before. It's not going to change because everything is the same. We're just now shortening the life. So what we want to do now is figure out what is that salvage value. And we know we're selling it for $35,000, but that's not an after-tax value. If you remember, we have gain on sale or capital gains tax on an asset that we sell, so we need to do that calculation. So the way we're going to go ahead and do it is we have the initial price of the asset was we need to figure out what the book value is because we need to figure out what the gain is. So the first thing we do is we calculate what is the depreciation, which we have already because we calculated that before at $10,000 a year. The sales price in year 3 is $35,000. So what I'm going to do is calculate the book value in year 3 because that's when we're selling it is year 3. So I take the initial cost and I subtract all 3 years of depreciation at $10,000 a year. So the book value is $20,000. So now we can calculate the gain, which is the purchase price minus the book value in year 3, $35,000 minus $20,000. So we have a $15,000 gain. So we just applied tax rate of 28% to that $15,000. So we have $4,200 taxes that we have to pay when we sell this asset. So the cash from the sale, though, is the sales price minus the taxes. So the gain was just calculated in order to get us taxes, but the cash is really the amount somebody paid for it minus what we had to pay in taxes. So the cash from the sale, or the salvage value, after-tax salvage value in year 3 is going to be $30,800. So I'm going to go ahead and put that in year 3. And then so we have the net cash flow in year 3 went from $22,960 to $53,760 now. So now we have this cash flow diagram and we can calculate the net present value on this to get a value of, and there's a couple, I've written here several different ways to do this calculation, but but all of these ways will give you a net present value of $30,238. Now, hopefully that will help you understand this concept of sale of asset or the calculation of after-tax salvage value. And this is all under the concept of investment analysis.